This is Veriscope News. Verified news. Clear context. We report using primary sources. We explain what the data shows. We avoid opinion and speculation. Each report is structured for clarity. Each statement is grounded in verified reporting. Our goal is understanding, not reaction. Authority and mission reinforcement. Veriscope News focuses on economic and market data. We rely on established institutions and major news agencies. We explain changes in clear and direct language. Today's report reviews new data on small business sentiment in the United States. The source is a verified Reuters report. All figures come directly from that release. Opening context. Small businesses play a central role in the U.S. economy. They account for a large share of employment. They influence local investment and pricing. Changes in small business sentiment often reflect broader economic conditions. These surveys do not measure output directly. They measure expectations and reported conditions. Over time, these measures help explain trends in hiring, pricing, and investment. Today's data offers an updated snapshot of how owners viewed conditions at the end of December. What's happening? In December, sentiment among small business owners improved for a second straight month. The improvement was modest. It followed several months of mixed readings. The National Federation of Independent Business, known as the NFIB, released the data on Tuesday. The group publishes a monthly Optimism index. That index tracks responses across 10 categories. In December, the overall index rose by 0.5 point. The index reached 100.5. This was the highest level in 4 months. 2 components of the index increased. 3 components declined. 5 components were unchanged. The primary factor behind the increase was a better outlook for future business conditions. A net 24% of owners said they expected conditions to improve over the next 6 months. That figure was 9 percentage points higher than in November. It marked the first increase in that measure since July. Who, what, when, and where? The data covers small businesses across the United States. The survey reflects conditions reported in December. The results were released in January. The NFIB compiles responses from thousands of small business owners. Participants span retail, services, construction, and manufacturing. Most firms employ fewer than 50 workers. The Optimism Index is reported as a numerical score. A reading of 100 aligns with the long-term average. Values above 100 indicate stronger than average sentiment. December's reading of 99.5 remained slightly below that long-term benchmark. Context and background. Historically, the NFIB Optimism Index has moved with economic cycles. During periods of expansion, readings tend to rise above 100. During downturns, readings often fall below that level. Over the past 10 years, the average reading has been close to 100. The index fell sharply during the early months of the pandemic. It later rebounded as activity resumed. In recent years, higher interest rates and inflation have weighed on sentiment. Supply chain issues also affected operations and costs. Labor availability became a recurring concern. December's increase followed several months of limited movement. The index had remained below its historical average for much of the year. The recent change suggests stabilization rather than acceleration. Price trends and inflation signals. One notable development in December was a decline in price pressures. Both actual and planned price increases fell. The net share of owners raising average selling prices declined by 4 points. That share reached 30%. While lower, it remained above the historical average of 13%. This gap indicates that prices are still rising faster than usual. However, the decline suggests some easing in inflation pressures. It reflects moderation rather than reversal. Planned price increases also declined. This can signal reduced cost pressures or softer demand. It can also reflect expectations of stable input prices. These measures do not indicate price levels. They indicate the share of firms adjusting prices upward. The data does not track magnitude. sales and employment expectations. Despite improved outlooks for general business conditions, expectations for sales declined. The sales outlook fell by 5 points. This followed a 10-month high reached in November. Plans to increase employment also declined. Fewer owners reported plans to add workers. This suggests caution in near-term hiring decisions. Labor conditions remained tight in several sectors. Owners continued to report difficulty finding qualified workers. Quality of labor ranked as the second most important problem. These trends show mixed signals. Optimism improved in one area. Operational expectations softened in others. Uncertainty and business concerns. The NFIB also tracks uncertainty. In December, the uncertainty index fell by 7 points. It reached its lowest level since June 2024. Lower uncertainty suggests improved visibility. It can reflect clearer expectations for costs, demand, or policy. It does not imply confidence in outcomes. Taxes ranked as the top concern among respondents. This category includes tax rates and compliance complexity. Labor quality followed closely behind. Other concerns remained present but less prominent. These included regulation, inflation, and financing costs. Deep impact analysis. Households. Small businesses influence household income through employment. When owners delay hiring, job growth can slow. When owners raise prices, household purchasing power can be affected. December's data shows reduced price increases. This may ease pressure on household budgets. The effect is gradual and uneven. At the same time, softer sales expectations can limit wage growth. Fewer planned hires can reduce job switching. These dynamics tend to move slowly. Prices. The decline in price increases suggests slower inflation at the small business level. This does not guarantee lower consumer prices. It indicates fewer firms are raising prices at the margin. Historically, sustained declines in this measure align with broader inflation moderation. Single-month changes are not conclusive. Trends matter more than individual readings. Jobs and labor. Hiring plans declined in December. This points to cautious staffing decisions. It does not indicate layoffs. Small businesses often adjust hiring gradually. They respond to sales trends and labor availability. Labor quality remains a limiting factor. If hiring plans remain subdued, job growth may slow. If sales expectations recover, hiring could resume. The data does not provide forecasts. Savings and investment. Improved outlooks can support investment decisions. Lower uncertainty can encourage planning. However, softer sales expectations may limit expansion. Small business investment often depends on cash flow. It also depends on credit conditions. This report does not include financing data. Businesses. For business owners, the data reflects balance. Costs appear more stable. Demand expectations softened. Taxes and labor remain structural challenges. These factors tend to persist across cycles. They influence long-term planning. What experts are watching next? Analysts will monitor upcoming NFIB releases. They will look for confirmation of trends. They will focus on price and hiring components. Other indicators include monthly inflation data. Employment reports provide additional context. Consumer spending data offers insight into demand. No single report determines direction. Consistency across measures matters most. What this means for viewers. For viewers, this report provides context. Small business sentiment improved modestly. Conditions appear stable, not accelerating. Price pressures showed some easing. Hiring plans softened. Uncertainty declined. These signals help explain the current economic environment. They do not predict outcomes. They add clarity to ongoing trends. Technical explanation. The NFIB Optimism Index is a diffusion index. It aggregates responses across 10 categories. Each category measures direction, not magnitude. Responses are seasonally adjusted. The index is normalized to a base period. A value of 100 represents the historical average. Net percentages reflect the share of positive responses minus negative responses. For example, a net 30% raising prices means more firms raised prices than lowered them. These methods allow comparison over time. They do not capture firm size or revenue impact. They provide directional insight. This has been Veriscope News. Verified news. Clear context. Thank you for watching. We will continue to report using primary data and neutral analysis.